Welcome back to the episode of my trading vlog. Today I want to go over a couple of different things, well, a few things. Bitcoin, SPY, GLD, Dixie, VT Saks versus M2 Money Supply, and Playboy. Let's just hop right into the charts. Bitcoin, now this has been a wild ride, and we just hit that target today. Today's Sunday, so I'm kind of making this looking forward to the rest of the week, but the target was at 40,500, and that target confirmed when we passed above 30,700. And when I was doing my last analysis, I said we have probably waves A or 1, B or 2, and then wave 3 or C would take us up here to 40,500, and we've definitely reached that. I believe we've seen a half-staff formation form through here, and if that's true, then we're actually going to be looking for the 161% extension at 50,116. Okay, that's awesome. I would love to see that. I also wouldn't be surprised to see the price come back down to 34,000 before launching off to get there. If this happens, I would be a buyer at 34,700 personally, if I were going to buy into crypto. I'm not currently invested in Bitcoin, so again, my analysis is pretty unbiased through here. Looking at the RSI, you might think, oh, that needs to cool off, but that's not really a thing. This is an expression of averages. Yes, there's a bunch of divergences through here. That doesn't really matter. In fact, I watch bearish divergences break all the time as higher wave degrees are completed. It's almost like every bearish divergence reflects a different degree of Elliott wave that's being completed. That said, I think we have 1 and 2 here at this looks like the minute degree I have notated, but is that the right degree? Probably not. I'll go through and I'll edit these to make them make sense. But we've got 1, 2, we're looking for 3. 3 will probably break this divergence. 4 and 5. If we get that big strong rally, I would expect the RSI to form another smaller bearish divergence here before entering into correction. So we could run up to 50,000 and dump to 34,000, or we could hit 34 and then run to 50K. But these are the big levels to watch, and this is a breakout. And I believe that this gap that we formed today, this is actually a breakaway gap. So this would imply momentum to the upside. You can see the MACD here crossing bullishly, which is crazy. That's the shorter period average crossing over the longer period average, and the histogram turning green. Looking good so far, looking really good. It really does look like it wants to melt up to 50K, it really does. Again, be cautious. The stock market, crypto, it can all do whatever it wants. When we get complacent, it's when we tend to make mistakes, but Bitcoin, it's happening. It's happening. I put these levels down, and it's been pushing up ever since. You know, bearish continuation was never even tested. This thing is melting up. I've done quite a bit of analysis on GLD, and I'm always very bullish on it. And if you're a longtime follower of the channel, you know I'm waiting for gold to reach $2,500 to $3,000 an ounce soon. Maybe a year, maybe 2 years, but I expect gold to get there. It's long overdue. I'm watching the money supply grow for several years, and it typically takes a very, very, very long time before that's reflected in the price of gold. Personally, that's what I believe. That's what I've observed. If you watch what happened with gold in 2008 and all that, I'm not going to go into it now. It's a big whole spiel. But do your own research. To me, it looks like it takes a long time to see those things show up. So even though now that M2 is coming down, gold could still rally here, even as rates rise or stay high, which seems counterintuitive, right? But there's more than one thing that pushes the price of gold around, so it really could be a number of different factors. Looking at my previous analysis, I think I've done a pretty good job. I want to go through this really quickly. I believe we've seen the completion of a corrective waves, B and C through here, and now we're watching a new motive wave count unfold. That new motive wave count really hasn't confirmed yet. We're at least looking for an ABC push, making a very, very, very bullish move, or a complete motive wave, and we'll talk about what each of those scenarios is. Looking at the bigger trend here, if I take the lowest close from that dip in 2022 and measure to the highest close, which looks like it happened in about May of 23, and bring my retracement tool down to the low before we blast it up to this new high, confirming this uptrend. This uptrend is now confirmed. GLD is now motive heading higher, setting almost an all-time high, I think. We need to get above that 193 and 194 level, but this is definitely starting to look motive. If we do this simple 1, 2, 3 or A, B, and C target, we're going to look for 215. That's really good. That's crazy. In which case, we're going to see gold rise. GLD tracks the price of gold. It's not gold itself. It's just ETF, but I like to trade GLD rather than buy, because buying gold is difficult. There's stuff you gotta do, and so I'd rather just play it in paper. I know if you don't hold it, you don't own it. But hey, guess what? That's like stocks. You don't, I mean, forget it. Okay. Anyway, so we've got a bearish divergence forming up through here. Doesn't mean that this move's over. In fact, the target for this smaller A, B, and C move over this 1, 2, 3 push is closer to 196. Again, don't be surprised if you get correction through here before we reach that target, but it does look like it's melting up. A big volume push too on the last session. Watching GLD with a lot of interest right now. This looks really, really good, which makes me want to go over to SLV. Through here, I've got pretty much the same count where we've had a downtrend for A, a sideways grind for B, and completing the downward push for C. And I think this could be one corrective phase in the big motive trend where I've got wave 2 at what looks like the cycle degree. And this would begin the next motive trend 1 at the cycle degree, and this would all be corrective wave 2. We're looking for wave 3 or C, which should be strong. And of course, if it pushes higher, just like the analysis suggests it will, it's going to be one hell of a ride. Putting down the extension tool there, just like I always do. This is a fantastic way to come up with price targets. It's ridiculous. And again, this confirms once we pass over this $24 level, which is also a target for the shorter term rally. So, hey, pay attention to that, right? So I'm gonna put down bullish continuation here and color this green. We get over $24, looking for $26.62. More like, let's see, I've already put $32 down here, a cycle wave 3 target. But if I do this with the extension tool, I want to see where that lands as well. It's right next door at 31.17. So I think GLD and SLV are going to push up. They've been going up a lot right now, so a sideways grind or maybe some bouncing around makes a lot of sense. Maybe some reverse triangle to throw everybody off, but very bullish here on the metals in general. VT Sachs versus money supply. If you don't know what VT Sachs is, very briefly, it's an ETF by Vanguard that includes 3,700 different stocks. So it's a ton of different stocks. The idea is that you're going to exposure to the entire stock market in the US. That is to say, NASDAQ, the New York Stock Exchange, whatever. And so we have that in purple and the M2 money supply in green. There's been a lot of talk about what's going on with money supply versus the overall stock market. So I just wanted to go through and show what I see. We've got a steady uptrend since we started this indicator in 2019. It changes a lot. The way that the Federal Reserve tracks these stats changes a lot. So you've really got to go onto their website and look up all of the past data too, because it gets kind of chopped up. You can see that, you know, obviously we've been tracking this data for longer than since 2019, but the current measure of M2 has, anyway, it doesn't matter. Moving on from here, you can see that the stock market was an uptrend all through 2019 with M2, with positive correlation. This big dump during the 2020 scare, that is just going to happen. You can see that the US stock market had no problem following the M2 money supply higher as money was continuing to be, quote, printed. And then we had this downturn that started in 2021. And that's when the money supply stopped growing and we actually saw some contraction. And the markets have moved into a neutral position since then. And I say neutral because we still haven't set an all-time high in, well, you know, the US stock market in general. And you can see that here. And you can also see on this chart that we still haven't passed above the last local high. And so right now the market is trendless. It's actually trendless unless you go into a very small time frame, which seems ridiculous, but that's what this is showing us. If I'm not wrong, what we should see is the markets correct to the downside with the money supply, if the money supply is the driving factor here. There's a correlation, but of course the two things are not directly related, right? Well, they might be, which makes me think that, hey, you know what? The money supply is still contracting, and it doesn't sound like it's going to start growing again. And so I would actually expect to see the stock market drop as money supply, as the velocity of the money slows down. The money's tightening. For higher rates for longer. Don't understand why people aren't responding to that when Powell gets up there and says it. Just, it's mind-boggling. Which kind of brings me to my next thing, which is the Fear and Greed Index. I get this from CNN.com, and I'll pull this graphic up. It's only at greed, but honestly, I feel like it's a little more than greedy at the moment, looking at these other charts and such. So personally, I'm waiting for this correlation between the M2 and VT Sachs to play out in a positive correlation, where stocks have now counter-trended this decrease in the velocity of money, and we'll watch stocks drop. Looking at the dollar on the hourly time frame, this is of course an important part of the equation. We looked at the money supply M2. I brought up a graphic of velocity. You can see that the dollar has been dropping. These are all important things. They all come together in some really complicated way. It's really hard to predict, but we can kind of read into them. The dollar is pretty straightforward. Dollar drops, equities go up. That's it. I don't know why, but that tends to be the case. You can see that about November, we reached a high after a grind sideways, and then boom, the dollar's been in a corrective downtrend since. And I think that this corrective downtrend correlates pretty well to the uptrend that SPY is in. The dollar is not yet recovered from this downtrend. We are still down, but we're grinding sideways more or less at the moment, touching down sweetly on 102.56, which would be the perfect 161.8 extension of the initial impulse down through here. But because I couldn't make a nice clean motive wave out of this leg of this downtrend, I am calling this waves A, B, and C corrective downtrend, which means generally over a larger time frame, the dollar is still probably looking bullish to me. I'm gonna zoom out here if I can get some data. There we are. I've got a lot of analysis through here. And when the dollar was looking like it was going to be super bearish, I held firm and I said, no, it's going to come back up. And it did, and it rallied, and it pushed higher. I was able to forecast that pretty well with what I saw back here, a leading diagonal triangle, not a rising wedge, a leading diagonal triangle. In light wave analysis theory, this is an indicator that would tell us that, hey, the direction we find this thing in is pretty much pointing the direction we're going to go for a while. And that's exactly what happened. It looks like I haven't updated this chart for a minute. Wave 5 extending way up here. That's a big wave. Basically, at this point, I'm going to be expecting the dollar to be bullish until we come all the way back down to 99.75, which I'm not really expecting. Rather, what I would expect is to see, I'm going to do it again, a nice clean A, B, and C. Where does that extension lead us to? Drum roll, please, 110, which would be a fresh push higher in the dollar. And maybe if you're really keen here, you're going to see a chart pattern through here. I'm going to clean up the chart just a little bit so I can get to the good stuff and say, hey, maybe it's right here. Boom. Now that could be a clean, quote, falling wedge. I'm going to need to get into like a 4-hour chart maybe to make that determination. But I couldn't get this like I was saying earlier, this wave C into a motive trend. And that's because I didn't really see any good. Well, there's a few rules. The first rule is that the third wave can't be the shortest wave. And here, this would be wave 1, 2, 3 being the shortest wave, 4, and 5. It's possible this is actually 1, 2, and this is all part of 3. But even if this is all part of 3 through here, those count rules still apply to that wave. I just couldn't do it. This makes me think that this is more likely an ending diagonal triangle where we've seen A, B, and C, A, B, and C, A, B, and C, and then a more tight A, B, and C through here. It's possible that this is actually a true falling wedge. We see the upward breakout through here. We're going to be looking for a high above the initial impulse of the breakout, which would be 103.502. This is going to be our bullish continuation level. And if we see the dollar pass above here with some determination, continuation, then I'm going to think that we're going to watch equities drop for a while. We've seen the RSI drop into oversold several times. We haven't even touched overbought in a minute. This is the 4-hour time frame. It looks like we're pretty neutral on the RSI. Again, we see the dollar soar past 103.502. I'm thinking it's bearish on the equities, and we're going to watch a big, strong push up in the dollar. Yep, so there we go. Okay, taking a minute to look at Plby as well. This is my favorite stock right now. It's, of course, not doing well right now, but that's kind of the point is, hey, this thing has been dragged through the mud. The equity has been just plummeting, reflecting the brutal transformation that the company's been going through. It's not quite cash flow positive yet, but it, I believe, will occur eventually. My timing has been horrible. I bailed out at around $2, and I've been sitting out this big long downtrend. I've had that bullish divergence form on the daily time frame here, where you can see the RSI made a higher low while the price made a lower low, and now we're starting to see that bounce happen from 44 cents up to about 66 cents. That's like a 50% rally. That's not bad. The RSI still hasn't reached a bullish level yet. We're still kind of hovering around 50 at 54. Volume is starting to come in as buying support, which is good, right? That drives some optimism. And the MACD here It's looking like it might actually come up to neutral. This has been crazy. This has been a wild thing. And I actually want to do something here. There's a potential wave count through here that I've been trying to ignore because I don't want to recount everything, but I think I might need to. You can see I have 1, 2, and 3, 4, and 5 maybe labeled through here. I don't know. You can see this is probably what's fundamentally wrong with my count here, is that this is probably actually not 1, 2, and 3 through here. This is probably an ABC, which means that we can then use this sharp correction here where this red arrow ends as wave 2 in the larger count, right? In which case I can take wave 1, place it there, pull wave 2 up to here, and then this entire stretch down has been wave 3 or C. And perhaps we can even call the bottom of wave 3 down here. We've had a flat wave 4, and this last dump has been wave 5. That might be optimistic, but this makes way more sense, especially since we're seeing the RSI driven so deeply into oversold here. And so I believe this is actually correctly counted 1, 2, 3, 4, and 5, where now we're going to start to correct to the upside, and there is a $60 range through here to correct. Doesn't mean that we're going to see the price run up to $50 or $40, but it does mean that we could see a fundamental reflection of the value of the company return to the equity, which of course right now is not a thing because again we need to see the positive cash flow. So I'm optimistic here and I'm ready to load back up. I'm watching this downtrend very carefully. You can see we came up to it and rejected it late last week, but volume was still pretty good. So if we can get a good push out of here above this downtrend, we could still see the price rise to $1 and quickly too. This was the big dump from earnings, I believe, a couple weeks ago, I believe in November. Can't quite remember. You know how it goes, lose track of time, but yeah, so watching Plby carefully here, excited to get back into it. Here we are at SPY. Let's go through this really quickly. I've got a corrective wave count here noted where I have A, B, and C waves coming down, and A, B, and C, where wave C is actually pushing up here. We have some sort of expanding flat. The expanding flat is always the one that tricks everyone because frankly, it looks like you have a new motive wave coming because wave C is so strong. When wave B sets new high or a new low, it's just confusing. It's got to be the most confusing way to capture the market with their pants down, so to speak. So what we're looking at now, I believe, is actually wave C. I think that this is truly a motive wave, but also that it's not going to unfold into another 5 waves of progress. It looks to me like we're losing momentum in a decrease of volume. The RSI right now is super high, and that's fine. Sometimes you see the biggest moves while the RSI remains deeply overbought, oversold, and so we're just waiting for this to end. Where it ends is really anyone's guess because it's starting to look like a massive motive wave. And that could set a new high. It could go up to the low 500s, possible. In my wave count timeline, it looks like we're reaching the high right now, and we'll be looking for this to turn down soon. This is not necessarily an exact date sort of thing, but it's like, hey, somewhere around here we're going to see that high, and it looks like we're reaching this resistance from the last local peak now at that time frame, the end of November, early December. If this is true, I'm going to be waiting for the top to show up this week. We get bearish continuation on a smaller time frame at 454. I'm going to zoom into the hourly here and zoom in a little bit and get an idea of what's going on through here. It looks like to me we had what started to look like the beginning of a new motive wave heading lower. Obviously, we didn't get that, right? This was just A, B, and C through here. So I would have to relabel, whoops, what I have shown there as wave 2 as wave B. Which is always good to have your alternative wave counts there written as well, so it doesn't you don't just get pigeonholed into one way of thinking, right? Like, was this wave 2 or was this actually wave B? Which is what it was. So we had an ABC, and this could, look at this, this could also just be an ABC back to back through here, okay? If I go down here, our target is somewhere near 459. And I'm gonna turn on a line chart because sometimes that helps clean up the charts. You can see that it looks way different on a line chart. This is just using the closes, not the open, high, and low. And this should temper our target a little bit. You can see price came up to there, 458.98, reaching the 100% target, meaning that this could also just be another ABC move through here. ABC, ABC. And now we'll start to get the motive wave heading lower. It looks like we're starting to do that now in pre-markets trading. The MACD here is starting to look a little bearish, but we're really still on the positive side of the indicator pretty strongly. Implied volatility ticking up here. which for me is a big thing. The implied volatility right now, I believe, is moving up as markets move lower, and so that means the motive, the direction of progress, is still down on higher time frames. On the hourly, we're waiting for that confirmation of bearish continuation at 454. We got down there, double bottom and reversed right away. So we're not ready to go down yet, but I'm looking for that this week. I think that's all I want to touch on. Happy trading.